Welcome to NatRevMD, a podcast where we share tips on optimizing medical billing and improving practice efficiency so you can have the business of your dreams. I'm your host, Dr. Heather Signorelli, founder of NatRevMD. Let's get started. If you've ever looked at your tax return and go, why am I paying this much when everybody else seems to be paying less? This episode is for you. I am bringing on not only a tax expert, but someone we've used for years who's an incredible person, extremely knowledgeable, also easy to reach. I cannot explain enough how fast my emails get answered when I email Riki when it comes to questions or just little things or even big things. And today, we're going to spend some time just talking about taxes and really how businesses can maximize their income. So with that, let me welcome to the show, Riki. Thanks for being on.
Hi, thank you. Thanks for that introduction. I'll start with a little more background on myself and we can take it from there. My name is Riki, as Heather mentioned, and I graduated from University of Iowa with majoring in accounting and finance and in 2009. And since then, I've been working in the tax arena. For the first 10 years, it was with big firms and working with much bigger corporations like Home Depot, those types of firms. And, I found myself wondering, am I really adding value to, or do I feel like my work is adding any value? And the answer I got to was not really. It just kind of seemed like a number. So then in January of 2019, I started my own CPA firm focused on, the smaller guys, higher earners, but small, medium businesses or individuals that just, where, if I save them $10,000, it's changing lives versus if whatever I'm doing at these corporations was not really, didn't feel the meaning from it. So that's the reason we started. And it started off just me, and then we kind of grew to, there's 4 of us now. And so we're a small firm, so we understand the, headaches and growing pains of when you have a small business to grow it, and what's, one of your biggest expenses ends up being taxes. So that's what we like to, how can we save? How can we help others save and really make a difference? And that's kind of why we started off. I did my master's in tax while I was working. So I always just been working on tax, wanted to stay in the tax world, but not with the big firm. So that's kind of how we came to be. And that's what we do.
Well, for me, it's been really helpful because I feel like I have 100 questions of like, how do I think about this real estate thing when it comes to our taxes? And again, not just our business, or how do I incorporate our, business so that maybe down the line, if we do exit, there can be some tax savings. And no matter what question I've asked you, you've known the answer and so quick. So is this just been built up of knowledge, or how do you remember them all? That's just crazy.
It's a combination of, doing this for so long and only doing tax. In accounting, there's audit, there's bookkeeping, there's tax. We offer bookkeeping and payroll services, but my focus has always been tax, and that's what I did my master's in. So it's just, part of it is just doing it for so long. The other part is, we have about 250 business clients at this point. And so everyone has certain questions. So as we've been doing this since January of 2019. We're on year 7. So we've just seen a lot of the questions that arise, and then as you work with them, you kind of just have the experience then from it. Also, since I started, the biggest tax law changes from 1986 happened in 2019 with the 2018 tax season. So we had to relearn a lot of the tax code from fresh. That was with the Tax Cuts and Jobs Act from the first Trump administration. And then now again, we're seeing it again, a lot of changes. So the cool part was also we dive into it and we go to these, we do all this continuing education, and it's new for everyone. So we get to really be the experts in this. And so that's been kind of neat as well.
So you do offer payroll and bookkeeping, because a lot of our listeners are medical professionals and they own their own private practice. So if they are thinking, gosh, I'm not happy with my tax situation, but more importantly, I don't have a solution for payroll, or my bookkeeping solution seems disjointed. So talk to me a little bit about that piece as well.
Of course. We primarily use QuickBooks Online for small, medium businesses. So what we do is we integrate that with your bank accounts, your credit cards, so we can see all the transactions going on. And then our team will kind of just handle the books for you. We'll have questions, obviously, but we like to meet with our business clients that we provide these services for every quarter. So we can talk about, okay, this is what your profit loss looks like. This is your margin, overhead. And these are places we can save on taxes. What are your plans for year end? Do you plan to buy things or not? And payroll, we kind of run it, based on this is schedule, whether it's biweekly or twice a month or monthly, however they have it set up. But the office manager at that private practice or whoever they have in charge of getting us the hours, we would take the hours, we run the payroll. That would take care of all the quarterly payroll filings due with the Fed and the state, Social Security Administration, or the Social Security Medicare filings, unemployment insurance, and based on your local jurisdiction, if you have any other payroll taxes that you have to handle. I think you were in Denver once. They had a occupational privilege head tax that was other jurisdictions may not have. So we would handle all of that. So it's basically just a one-stop shop. So you don't have to worry about any of it. And then we do the tax planning with you as we go.
So if I'm a medical practice, what are, some of the things that medical practices can evaluate, right? I don't want to say always lower their tax bill because I know it's different for everybody. And so if I'm a practice though, and I'm like trying to think through, okay, what are the things I can think about? What would your expertise say?
So if you have your own practice and you're running it, there's obviously the first thing is structure. How are you structuring the practice between an LLC or an LLC tax as an S corp, or did you go the C corp route and are you trying to grow it and have stock shareholders where you're going to sell it one day? And those are three of the big entity structure types. If you're just an LLC, you're likely getting extra taxed on your Social Security Medicare because everything you make is going to hit the self-employment tax piece, which is Social Security Medicare. And then on top of that, you have income tax. And when you're self-employed, Social Security Medicare comes out to 15.3%. So just for an example, if you make 100K and you pay 20% in income tax, there's 20,000 right there. But then another 15K to Social Security Medicare tax. You're taking home 65K, not even talking about state income tax yet.
Yeah.
If you do the S corp election, you can still be legally an LLC. It's an easier structure legally, but you can do an S corp election and right away just make that same 100K, make your salary 50K instead of, and 50K you take in owner draws. Right there, you saved $7,500 from only paying Social Security Medicare tax on 50K. Obviously, that's 100K. Income goes up, the savings become much more.
Yeah.
This is just easy math with the 100,000.
And do you have to keep going up in salary or does it max out at some point?
The rule is the IRS wants reasonable compensation. What's reasonable compensation? It's kind of gray, but there's case law that says, they don't want you evading Social Security Medicare tax, but they understand when you're self-employed, you're paying both halves.
Yeah.
So whereas an employee, you only pay one half of it. So they understand you're getting hit with that. You're getting hit with paying others. You pay their Social Security Medicare tax, half of it. So they want to give you a break. So reasonable comp would be, something that someone in your industry could make likely if you were an employee, what would you be making?
Got it.
We look at it like, don't evade the Social Security Medicare tax. So if your business take home is 100, you can't make your salary 10K and just say only pay Social Security Medicare tax on that. There's also the part where sometimes you want to have the salary be enough so you can do your retirement contributions because that's based on the salary. You also want to look at, are you paying in the Social Security enough because when you collect your Social Security, when you retire, it is based on how much you've put in. And the formula is based on 10 years of, it's a complex formula, but you don't want to evade it because you want to have that benefit of collecting Social Security. You also want your retirement contributions are based on how much you set your salary to. So there's a lot of factors, but we try to find a sweet spot where you're not overpaying on tax, but you're also getting the deductions and the benefits of paying into these taxes.
Got it. Yeah. And what has been nice as a client of yours is actually like what we just did a couple weeks ago or whatever that was, where we sat down and kind of looked at some of those things and we talked about 2026 planning, which was really helpful. And that sort of approach, I think, to things, because things do change, right? Like we've got some things that are changing and it was just nice to go through and go, okay, let's get a plan around that. I need to do that before the end of December. And for us personally, that's both helpful, just not only in the business side and also things change, It's like stuff changes all the time. both with the tax code and then personal and business situations. So it's really great to have a team that we can do those sort of meetings with. All right, let's talk 1099 LLC versus S Corp in terms of like employees, an employee of somewhere. Like, is it good to be a 1099 versus a W-2?
Yeah.
And just give me a little bit about how you think about that, because we've got listeners who may be like doing some locum stuff on the side as well.
Yeah. So, well, I'll start with when you're a W-2 employee, like let's say you work for a hospital as a W-2. Um, the first thing is sometimes you just have to be a W-2 legally. There's labor laws that say this is how we define employees and this is how we define 1099 contractors. The tax code loves the LLC, S Corp, 1099 contractors. That's where you can get creative with deductions. As a W-2, you used to be able to have some room for creativity prior to 2018. Prior to 2018, as a W-2, part of your itemized deductions included, your accountant's tax prep fees. So what I charge, your financial advisory fees, what maybe your Edward Jones planner charges, and also unreimbursed employee expenses. So if you have a W-2, you're working at a hospital, but you're buying a computer and you're using it for work, or you're buying some office supplies or your meals, you can turn those in as itemized deductions and get a deduction. They said no more. I was taking advantage of that. They were writing off a lot of personal things they didn't use for work, but how would the IRS know?
Right.
So what they said is if you have these unreimbursed employee expenses, take them to your employer. Your employer can pay you and your employer can take the deduction. So chances are a lot of those deductions your employer is not going to cover. If you say, oh, I bought this lunch or I bought this computer and I use it for work sometimes, they're going to say, we provide you a computer. You don't need that extra computer, right? So that's where we got rid of that. Now, the only place to get deductions against your, earned income is if you are an LLC, S Corp, or getting the 1099 income. Even if you don't do the LLC, you get 1099 income, you can deduct anything you want against it. Now, technically, it should be for bona fide business purposes. It should have if you spend the money for a business, it's a good deduction. But again, where's the burden of proof? And that's where, gray areas come in. But, if you're eating meals and you're talking about work, deduct it. If you are your home office, you can deduct against your 1099 income. If you're running payroll for others that work for you, that's a good deduction, but you can also put your kids on your payroll if they're doing some work for you. I have young kids, but they're model on my website. They put stamps on envelopes and they think it's stickers.
I was about to say mine are stuffing envelopes right now with thank you cards, and they're going to be sending those out over Christmas break.
Exactly. So you throw them on payroll. If they're under 17, up to the standard, and even if they're not, up to the standard deduction right now is $15K per person. Pay them 10, 12, 15K, depending on if they have any other income. You pay no income tax on that, and neither do they. Neither do they. And that's a good deduction for you. So you got 2, 3 kids, 30. Now they can start a Roth IRA and it grows tax free. So you do that year after year, and they're going to be set up for retirement very well. And that money comes out tax free when they take it out. So there's a lot of opportunity in that 1099 contractor space or having that small, medium business versus the W-2 space where if you're a W-2, you can't employ anyone. You can't write off your vehicle or your home office or your, different things like that, meals, anything. So when the opportunity is there, if your employer will allow it, I would recommend doing the 1099, but work with an accountant and get all the deductions and make sure because otherwise anything you take home as 1099, I'll see if you don't do the S Corp election, you are paying self-employment tax and income tax, and you're paying both halves of that Social Security and Medicare. You could end up screwing yourself and paying more if you don't take advantage of all the tax loopholes when you do that. So it's just important to have the knowledge to really be able to take advantage of it.
Got it. Yeah. I mean, and that's what's been helpful is I think everybody's situation is different. And so it is easy to get kind of misconstrued by social media, and we'll talk about that next, but just different things out there that it's easy to screw this up, I think, because there are so many nuances and it is so dependent. I mean, maybe there's some generalizations that you can make across businesses, but it is helpful, I think, to know everybody's situation is again just a little different. So
100%. And one thing I'll touch on is the industry does matter. So, if you're a dental practice and you're writing off a pickup truck, the IRS does have their database of how they randomize audits and they look at certain deductions you're taking. and which field would expect that kind of deduction. So if you're a realtor, they expect vehicle 100% deduction because you're driving around all day with
Right.
clients or to sites or whatever it is. But your commute to and from your office is not supposed to be a good deduction. That's just considered your regular commute. So why is a dental office writing off a pickup truck? That might create a flag.
Yeah.
So you want to pay attention to your industry. What are the normal deductions and what might be flagged, and also make sure you're within the, thresholds of taking that deduction for your particular industry. So that's something where, every situation is slightly different. So a good deduction for you is not going to be always the right deduction for someone else. But that's where, we come in and try to look at that and make sure you're not going to raise a flag with anyone.
Yeah, that makes me just absolutely terrified. Not because I don't think we'd pass an audit. Like, I don't think we're doing anything that isn't right, but it's just the time it takes to actually do an audit. I have a friend who just got audited in New York. She actually is a W-2, so it was like she's a partner. But anyway, she got flagged from the state of New York and had to do, and it was, I don't know, she said 40, 80 hours a week that she was it's I mean, for multiple people on her and her accountant and everybody. I mean, she's like his most awful experience. So like, but I feel like sometimes it's random, or are there, I mean, I guess things like you just described where you can try and make sure that you don't do those things to flag yourself, but otherwise you just hope and pray.
Well, it's still random. Even with those parameters, what they'll do is, okay, let's grab everyone that took this deduction and put them in this bucket, and then we'll randomize 1% of those get audited.
Got it.
So it's still in a random sense, but you can lower your chance of being in that random bucket by
Doing the
making sure
appropriate things.
your filings and deductions are in a certain threshold.
Got it. Okay. Good. Just because the idea of that again. So, I mean, I guess you probably had clients who've been through audits, and I guess your team assists in that sort of thing in those circumstances. Yeah.
I mean, if you are within if you're doing something fraudulent and you
Yeah.
told us
You're on
these
your
are
own.
your deductions and so we took them, we're gonna sit that one out. But
Yeah. Fair enough.
if it's
Kosher.
all kosher, yeah, we will help support.
Yeah. I get that. Okay. What are some of the misconceptions you guys see coming your way? And I do want to talk about AI, just like what you see as the future. You just got back from a conference, so curious,
Yeah.
what you're learning. But do the misconceptions first, and then we'll do AI. Maybe they
Okay.
go together.
Sure. Yeah, they absolutely do. But for misconceptions, I mean, these days, especially in the last few years, I've been getting a lot of, a client will forward me an Instagram video and it'll say, you can write off your entire kid's K through 12 education if you just make a trust or something. That's not true.
And false.
And this is bad information. Now, I mean, I'm sure in the medical field, you guys see it a lot with everyone's got a medical degree on social media now, and it's saying,
Yeah.
this is going to save your life, or this is giving you
Gonna kill
cancer,
you.
or
Yeah.
whatever it is. If you eat this, and it's similar in, I think, a lot of industries right now with just how much everyone has a voice on social media. So, one of the things I did see is a client did email me about that trust, and you can write off your kid's education and this and that. But, a part of that might, if you just Google that, and you might get a little bit of that is true. But all the income all of that expense that goes to your kid that's spent on the kid is income to the kid, and then they pay tax on it. So sure, a little bit of it might be written off, but it's taxed again. So it's not necessarily, it's called an income distribution tax, that you're just shifting things and you're not getting the whole picture of what they're saying just on a quick, Instagram reel. So that's where, there's things like that. And then we'll get, a lot of clients every time right now is one of my busiest times, November, December, because it's not much compliance, but there's a lot of planning going on. So we're meeting with all our clients. Before this, I was on the phone with a client and he was very upset because all the billionaires aren't paying tax, but he has to pay this much tax. And then they're complaining about, the government, it's just debt and this and that. And, I'm not going to get involved on anyone's opinion on the government, but, there's obviously misconceptions there too. We were saying Donald Trump didn't pay any tax. He paid $700 that one year.
Yeah.
But if you look at what he paid to China, it was over 200K that same exact year. They're also, once you have a certain amount of money, you can also, spend it to take a deduction, and especially in real estate,
Yeah.
because they have bonus depreciation, like that's all back right now. So if you made 200K and then you took a loan for okay and bought another commercial property, a lot of that build out with these cost segregation studies, we can deduct 100% of that right now. So it looks like you have zero income, even though you made 200K and the deduction you took was from a loan. So the loan doesn't get taxed. So it looks like there's no income and you don't pay any tax. At the same time, if you just have income and you're not making these business moves to buy more assets or grow your business, you're not going to have those deductions. So it's, a lot of it is what are you doing? And then do you want to take that risk every year to spend money or, what's your personal situation? A lot of people are a little more risk averse based on how old their kids are or what's going on in that situation. And, I never say spend money just for a tax deduction because then you're creating assets and things you don't need. The tax deduction is 30% maybe or 25% of what you bought. But if you don't need that purchase at all, what are you really doing?
Right. What are we doing here? Although real
So
estate, I think, and we have a little bit that we've done, but I do think that in this field, right, physicians or high earners in general,
right.
that seems to be a very popular thing. If you can do it in the right way and buy something that's going to hopefully do well, that's the
Right. And if you have a practice and you're able to, and you have the opportunity to buy a commercial building and it makes sense, I recommend it, even if you're the only tenant,
yeah.
because you can rent that building to yourself. Your physician practice pays the rent. Your rental income is depreciated, and all the expenses against it pretty much show no income. Even if you show income there, that income is considered qualified business income that gets a 20% haircut, where your physician practice is considered a specialized service trader business and you don't get that 20% haircut.
Wow.
So you can shift income. It has to stay in market rate, but like you can shift income, get more deductions. You take depreciation against it. So you're lowering your taxable income just by owning that commercial property that you rent to yourself. So your cash flow stays the exact same and you pay less tax. So another thing to consider. But
Yeah. I mean, I do feel like all of that takes time and planning so that you can figure out which way
yeah, and
to
that's
structure it.
work with your CPA and they'll help you with that. They'll tell you the depreciation rules. If you should get a cost segregation study, does it make sense? And yeah, those are all things, you sit down, you think about, and we usually create like an analysis. Hey, without doing this, with doing this, what's the annual tax savings and this is why your cash flow is not changing, but you're saving tax dollars. So your cash flow actually goes up. If you're not getting that, what's the point of doing it? And I don't like doing anything for anyone that if I'm not saving you money, why are you paying me?
Totally.
If I charge you $1,500 to do an election for you and do all this work for you, you better be saving more than 5K. Otherwise, why'd you pay me $1,500 for this work? That doesn't make sense. That's kind of how I look at the cost benefit for clients.
Yeah.
And we kind of go through that planning. But yeah, that's kind of, misconception. There's social media. There's obviously people don't want to pay tax because they hear all these corporations aren't paying tax. There's also a misconception there with, well, they pay employees. The employees pay tax. They pay half of everyone's Social Security, Medicare. They're paying sales tax on certain things or use tax. Sorry, not sales tax, use tax. So there's other taxes they end up paying. But yes, of course, it's always going to be unfair. But can you take advantage to the best you can in your situation? And that's what we like to see.
Yeah. Strike that balance. All right. AI, do you feel like that's going to come and replace all of us humans? I mean, I have my own biased opinion on that. My son, who's 12, I think we have kids that are similar ages. He's running around going, I don't need to do my homework because
Right.
I don't need to learn how to spell because ChatGPT is going to spell for me all the time. And we have that. He actually did a full debate in his class. He's in a debate class in 7th grade.
Yeah.
And it was for AI and against AI, and his was for AI. And actually, the against AI was the team that lost in his grade. But anyway, it's just a big topic, I think, these days. And so, we're curious if that was brought up at your conference recently, or your thoughts around this.
Yeah, it definitely was. And there were 2 courses I took on the AI and the future of AI in our industry. You think about the future of AI in any industry, a kindergartner, they give her an iPad at kindergarten.
Yeah.
We don't own one at our house.
Don't go down that rabbit hole.
Yeah, I'd like to for as long as we can with the kids, but I understand, they're doing the exams on iPads. So if she doesn't know how to use one, she needs
Yeah.
to. But either way, in my industry from tax and accounting, what I see happening based on the vendors that we're getting, like ChatGPT is not good for my tax research. I've seen it be wrong many times. but they do have tax and accounting models that, obviously are a little more expensive and they're specialized, and all the data feeds into that is from, tax case law, accounting law, the IRC code. It's not from just articles on, ChatGPT will pull articles from Google or different places. And a lot of it can be opinionated. You never know. I've seen false information come up on that all the time. So what I see happening in our future for tax and accounting is things will get hopefully automated. Like maybe, bookkeeping can be a lot more automated. The software can just say, we know this vendor is a meal and restaurant. It's automatically just categorizing things for you. The hurdle is going to be, is tax compliance ever going to be automated? I mean, the IRS still uses fax. They haven't they're trying to get more digital, but they keep getting their hurdles with no funding. They're furloughing a lot of people. They got cut 35%, so they don't have the budget to get IT in there. So if you don't have the jurisdictions, like even, the State Department of Revenue and everything updating and getting their systems updated with AI, AI can't file into that jurisdiction unless it's also on that same platform. So that'll be something that, we might be behind on in our industry. Other industries, corporations that have data entry associates may not need them in the future. But what does that mean for jobs? In my opinion, and none of us really know the answer, but I think jobs change more than they just get completely replaced. So accountants don't have to do the 80-hour tax season work because a lot of it hopefully is a little more automated. We can spend more time planning with you guys. And that's one of the biggest complaints, right? My accountant doesn't plan anything with me, or they file a return during tax season and I owe all these taxes and then I don't talk to them all year. Because we're so busy doing quarterly filings, doing these filings, if we can get away from that, we can spend more time with the clients and save you the tax dollars. And more of us doing that can maybe create less work hours with similar or better results. So everyone still makes a similar salary, hopefully. That's the optimistic view, I think. And that's what I hope happens. But yes, I think the goal is for AI to replace some jobs, but I'm hoping it creates different jobs opposed to just knocking out, replacing them. But time will tell. And it's something we think about a lot, my wife and I, because we have young kids and what are they going to do down the road? And so there's a lot of thought that goes into it. But, the optimistic view is that things just change opposed to replaced.
I think, I forget who said this, but it may have been Alex Hormozy, but he was saying that as long as humans are needed to control the bots, there will always be jobs for humans. And when the bots start controlling the bots, we all have to worry, right? Like we're all done. So, and I do think there's some truth to that. I think there's like your kids, my kids, there's going to be a very different view as to what their roles may be. But I think as long as we're setting them up with a good foundation that they understand business, I think is really important, because I think being an owner, even in today's world, is always better if you can be an owner of something than just being an employee. Then you're just always just trading time for money. Whereas owning something, you can get out of that rat race a little bit. You may still be working in the business and not just on the business, but you trade money differently, I think, in those circumstances.
Percent. And part of, when I did leave corporate, a lot of it was, am I adding value? And it was very, do I want to do a career change altogether? Like I'm just going to work and doing this paperwork every day. And so there was a lot of thought in that. And then, I found a way to add value by doing what I'm doing now. Even, the rat race and the money and everything like that and the tax savings, outside of that, there's also the opportunity of flexibility. You work and your income is very, very much associated with the time and work you put in. Where W-2, one employee can be doing nothing and the other one can be doing all the work, and they might have very similar salaries because people just don't know in that space. And so there's the flexibility. If I don't want to pick up more clients right now because I'm at capacity and I want to spend more time coaching soccer, I have that opportunity to do it. And, that's a family decision on how much money do we need and what's more important versus time. So when you're in that, ownership role, you do get that flexibility, which gives you a little more freedom as well, even if it's not monetary.
Totally. And there's, again, I'm blanking on the book, but freedom of time, money, purpose, and passion. I think it's a Dan Sullivan mantra, but basically having those four things, right? If you have just freedom of money, like you have all the money in the world, but you don't have freedom to do what you want to do in your spare time and passions and all that stuff, then it's like, what's the point of this? And so I totally agree with that. All right. Well, so how do people find you if they want to check you out? And we'll put the links in the show notes.
Sure. So our website is www.sing. It's like sing a song, CPAS.com. Sing, SINGH, C as in Charlie, P as in Peter, A as in Apple, S as in Sam.com.
Perfect.
That's our website. It's got all our contact information there. You can see our team, four of us, and meet the family. And then my email is my first name at my last name, CPAS.com. So my last name is Singh, SINGH. So it's Riki, RIKI, at Singh, SINGH, But visit the website. Everything is there. Phone number, email, our portal you can sign up for. And, you just basically right now we are hoping to take on new clients. We aren't actively marketing so much, but happy to work with anyone. We work nationwide. We have clients in California, New York, Michigan, Minnesota, pretty much most of the states. That's kind of how you can reach us, and look forward to hearing from anyone that is interested.
It was great chatting with you. Good catching up last week too, just on all things planning. So just makes us feel a little bit more secure about what's going on in 2026. So we like it. Thanks for being on. I appreciate you coming on and just chatting with.
No, thank you so much.
Thanks so much. Bye.